Hello everyone, this is Martin. I'm up here in the top left hand corner smiling back down at you, and I want to thank all the new subscribers from around the world. I'm getting quite a number of new subscribers, and that's really pretty exciting for me, and I guess a lot more people are catching on to my weekly videos, so thank you very much to all those new subscribers, and thanks for watching the videos. And if you have any comments pertaining to the videos, you can leave them in the YouTube, underneath YouTube there in the chat section. So we're going to be looking at how to trade Forex with my new Easy Read charts. Now, I came up with these new charts late last year. They seem to be doing quite well. A lot of people are excited, have taken my brand new course. The course is called Forex Success in 5 Weeks, and you can get more information if you stay tuned to the end. You can email me anytime, and I've got a free PDF ebook, 33 pages for you. So my email address is mskyj007@gmail.com, and I'll hand that information out to you again at the end of the video. So now we're going to move right along to the disclaimer. I know it's small print, everyone, okay guys, but I want you to read this. You can always pause the video at any time just to take a look at this, but basically I provide the information in this video for educational purposes, okay? I want you to understand that I produce it before the market opens on the weekend, so my ideas and opinions may change at any time as the market conditions change. Just want you to understand that. So the reason I'm producing this video is to help teach you to make independent investment decisions, and always view the video at your own risk, okay? So now we're going to move right on to the charts. And before I do, I want to draw your attention to the Forex Factory website. They have an amazing calendar of all the important news events that are scheduled for this coming week. Starting here, you can see on Monday, May the 19th, Tuesday, and we're going to scroll down in a bit. But the reason I want you to understand this Forex Factory calendar, it's going to help you tremendously, because if you know what important news is coming up, you may want to stay away from trading on that particular day, or at least during the actual news event. And for this week, it is really super important to understand that on Wednesday, just to take a look, by the way, the important news events are highlighted in red. See the dark red right here? So when information comes out, and it comes out at the split second, so in this case for the on Tuesday, May the 20th, 5:30 a.m., we've got the CPI report here for the British pound, and it'll come out exactly. It'll show up in this column right here, okay? But I want to draw your attention to Wednesday. Why Wednesday? Because it is expected that the U.S., the Federal Reserve, will increase its interest rate from 1.5% to 1.75%, which means that should strengthen the U.S. dollar against some of the currency pairs, and that means the market's going to be very volatile. When does this news come out? We'll take a look to the left here. Now, when you put up your Forex Factory calendar, depending on where you are in the world, it should be to your local time. So right now, I'm talking about 2 p.m. Eastern Standard Time, because I'm presenting this video from the Toronto, Canada, which is Eastern Standard Time Zone. So 2 o'clock in the afternoon, my time. The FOMC, and that's the statement's going to come out. The federal funds rate, it's expected that the U.S. will increase their interest rate by 0.25%. So if you do any trading at that time of day in your local time zone, beware that the markets could be very volatile. Then at 4 o'clock that same day on Wednesday, see right up here, Wednesday, March the 21st, we've got the New Zealand official cash rate. and it's expected that their interest rate will stay the same. So we've also got 8:30 in the evening, and this is huge, the employment change. So all of this news that comes out, and if you have this open on your website, then you'll be able to see this information. This column here will pop out with the correct information, with the correct numbers, and it's a good idea to stay tuned to the news, especially when it comes out. And again, they're highlighted in the very dark red here. Okay, so I think that's the important news for this week. Let me just take that off, and I'll scroll down to Friday. So that's Thursday. On 8 o'clock, okay, we've got the official bank rate votes for the Britain, the British pound here, and again the official bank rate you can see right here. Currently, it's at 0.50%. It expected that they're not going to increase. So again, though, any type of news that comes out, whether it's positive or negative, it's going to impact on the currency rates. Okay, so just keep that in mind. And that's for Friday. That's for this week. And that, again, you can go to forexfactory.com. It's a free economic calendar of all the important news event that comes out. Okay, so I'm going to pause the video for a second, and then we're going to go right to the chart. Okay, we're going to start with the Euro USD daily, and I've got something new again for you this week. I will always now include a little arrow right beside the name of the chart or the currency pair that we're looking at, and you can see the arrow is sideways. It's red, which means price could either possibly go down further or sideways. My bias is sideways. So when you see the arrow pointed to the right side, as this is right here, then we're looking at sideways market. So you're going to have to wait for further evidence, and note that I've got major support here outlined in this gray rectangle. I've got resistance up here. So right now price is near support price from this area, and you can see I've got a triangle drawn. This is an asymmetrical triangle, so here price is at the bottom. It could bounce higher. We do have green above blue, and the easy read charts tells you that when you have green above blue, anticipate a move higher. Okay, unless there's further evidence to the downside. But right now, I mean, we're looking for price to break higher, and if you think price is going to go higher, you could look at buys above 123.99 to the upside. And if you think price is going to go lower, you're going to have to wait until price clears the previous swing low here in the support area, and you could look at possible lows below 121.66. Okay, that is for the Euro USD. Now we move along to the British pound. Now you can see I've drawn in this long line here. Price was going up, down, and finally broke through the upper trend line. Trend lines, by the way, are dynamic resistance. Here's a hard resistance. Okay, these are the horizontal levels. So there's resistance. Here is support. Okay, here's support. I've drawn that in for you, so you know basically the areas that we're looking at. And here price did break higher. The candles were very small last week. You can see this red vertical line. So this is the price action. This is what happened last week. This is Sunday, Monday, Tuesday, Wednesday trading, just a little doji here. Thursday, a little bearish, kind of a doji. Friday, another doji. So my bias, take a look over here to the left. My bias is to the upside, and I'm looking for, this is a tight level here. I'm looking for a buy above 139.55. Now, that was also a level I mentioned last week, and if you're still in a trade and you haven't closed it, I wouldn't close it just yet. My bias is to the upside, so right now there's a loss of about 20 pips. That's really nothing, because your stop loss would have been down down here below this candle with the blue dot. Okay, that is a momentum breakout candle, most squeezed breakout candle that I include in my course. But anyways, if for the new traders, or if you haven't gotten into a trade yet, I'm looking for a buy somewhere above 139.55 to the upside. If you think price is going to collapse and go down much further, then you could look at sells below 137.28. Now we move to the Australian USD, and let me tell you that the Australian the Australian dollar was one of the weakest last week. Okay, and it dropped quite a bit. Take a look at this huge bearish candle on Friday. This is the last trading day of last week. So we are now sitting at support. Okay, I've drawn in this gray rectangle. And if you think price is going to go lower, then look at sells below 0.7695. And if you think price is going to go higher, then you can wait for price to return and reverse all the way and go higher. But look at buys above 0.7823. I'm favoring, take a look over here, my bias is to the downside. Okay, so I'm thinking prices from here, it's just going to go down further. Now with this big huge candle, just beware, because we're at support, price could actually bounce a little bit higher. Okay, can bounce a little bit higher and then come back down like that. Okay, so just keep that in mind. Let's take all that off, and let's move right to gold. Talk about gold after the Australian dollar, because the Australian dollar, the currency is tied into how well gold is doing. Take a look up here. My bias is sideways, so price is really just going sideways. I would wait for further evidence, and you can see I've gotten a few arrows here. I don't actually have a price level for you, but above here, you would have to wait for price to come up here and above this resistance for you to take a buy signal, down below the support right here for a sell signal. Okay, take a look at the MACD down below. Just the blue MACD line is just horizontal along the 0 level. Okay, and that means we're in a sideways market, so you have to wait for more evidence. Okay, now let's take all that off, and let's move to New Zealand USD really quickly. Again, I've drawn in my bottom trend line. You can see right here, trend line on top. So we have a rectangle. Price really has just been zigzagging up, down, up, down. Okay, and what do you think could happen here? Now let me just tell you again, just to remind you, we have the trend line here, which is like a dynamic support. We have a support area with this gray rectangle. We have the red dash line. You can see the red dash line. That is the 200 SMA. And we have the blue dash line, which is the 89 moving average. So with all this confluence, when you have all these clues together at the same place, it's called the confluence of evidence. And right now I'm favoring price to either go higher again or sideways. Okay, and again, take a look. I've got a sideways bearish. So here we want to wait for more evidence. If you think price is going to go lower, you would have to wait and determine if you want to take a trade below 0.7168, and on the upside you would have to wait for price to go above 0.7354. Okay, so that is the New Zealand USD. Let's move it along. Now we get the USCAD. Okay, the USCAD was one of the big winners last week. It actually, with my last week's video, you could have made about 125 pips, and I believe price is going to go higher. So my bias, take a look right here. My bias is to the upside. I've got this green arrow here, and you could look at price coming down just a wee bit. There's three options actually. Okay, so for a buy signal, you could wait for price to retrace a bit down to the 130.53 area and then bounce higher, and that's why I've got that red arrow. So you could look at price coming down just a wee bit, or even down further, meeting up with the 8 EMA here, and then going higher, okay, and watching for a price to go higher above 130.53. Or I've got this red arrow here, meaning that you could take a buy trade right now, or a few pips above the high of this candle here. Your stop, your aggressive stop would be right about there, and your conservative stop would be there. Okay, so so you could take a buy trade right now, or wait for a bit of a pullback, which means you're a little bit more conservative than looking for a buy to the ups, for candle to the upside. Or if you think price is just going to collapse, then you could look at price going down below 127.73. Now remember, we got the rate hike, U.S. increasing their interest rate this Wednesday. If that's the case, this price here could shoot all the way up to this. I've drawn in this resistance area right here, okay? So just keep that in mind. Well, price could come down first and then shoot right up, okay? And that's what usually happens with interest rate decisions. Let me take all of that off the chart, move right along to oil. Oil has gone up on Friday. I mean, it was sideways action here. And take a look at the MACD. Do you see the blue line here? Blue line is just horizontal along the zero. That's sideways action. So you're looking for clues either to the upside, to the downside. We have a little bit of pink forming. You see right there, pink below blue, which means we should be looking for sell signals. However, we had a huge up candle on Friday, so if you think price is going to go higher, you'd have to take a buy above here. However, all I'm saying is I'm looking at a sideways market where I think price from here is just going to go maybe bounce right back lower again. Okay, so up and then just down. Now we got the U.S. Swiss franc. This was not a bad pair last week as well. It went down, bounced off the support here, and then we had a huge candle on Thursday, and then a doji. So I'm thinking that price may come down a wee bit. Okay, there's two scenarios. Price may come down a wee bit, then go higher, and then or you could look at a buy, and I've got a really tight upper level here. So right away, if price goes anywhere a few pips above 0.9534, you could look at entering a trade. The best way to do these is to watch the charts on the 4-hour time frame. These are, remember, these are daily charts, and you could have a on Monday, the open of the trading week, Sunday, Monday, the price could shoot right up right away, or it could come up and then come back down. So again, you might, I normally don't trade on a Sunday, Monday. I wait for the Monday to finish. But again, if you want to perhaps catch a trade to the upside, you could look at perhaps above 0.9534. Although for price to go higher on Wednesday after the rate decision, that's the time that's really most likely going to happen anyways. Okay, so my bias here, take a look, is to the upside. Now let me take that off the chart. Let me move right along to the U.S. Japanese yen. Again, we've got price here is not making lower lows. You can see. And I'll explain what that means. So price went down, went up, price went down, went up, price went down, went up, price went down and up, price went down, starting to go down, and it possibly could come down here, but err with caution, and I'll tell you why. Okay, let me just take that off so you can see this clearly. Do you see these long wicks right here? Okay, this long wick here, okay, with that candle, long wick there, long wick there. When there's a long wick below, that means the sellers, there is weakness to the downside. Okay, you can also see here the blue MACD line is above pink. even although we are in a downtrending pattern, my bias, really, take a look up here, is sideways, either sideways. I kind of favor to the upside because we're almost here at a support level. But and again, if you think that's going to happen, again, my bias is sideways, but you could be looking at buys above 106.83 to the upside, or wait for price to come all the way down below 105.46. So basically, we're waiting for evidence. We're waiting for one bullish candle, again, with conviction, to close above this EMA right here. So we want one candle to close above here, and then you could possibly look at taking a buy trade. Okay, so that's what I see over there. Let me just take that off. Okay, now we move on to the Euro JPY. Now, some of these crosses are going should be given you, or you will be able to get some pretty good trade opportunities from these crosses. And here you can see my bias. Take a look up here, is to the downside. I believe price is going to keep coming down to retest the previous low here. And then we have a major support area here anyway. So I think price is going to come down lower. And if you think the same way, then you could look at sells below 0.8807. Or to the upside, price would have to come all the way up here and break this area. And you could be looking at buys above 0.8873. Take a look at the MACD though. Blue MACD now line is below 0. We have pink bars, even though we're still above 0. But my bias is to the downside. Price may come down. Price may come up, I should say, a bit first to again retest this trend line in this type of fashion here. Okay, and then possibly come down like that. Okay, so that is that. Now we move to the Euro JPY, and again, take a look here. Price has come down quite a bit. We've had like 3 bearish candles in a row. We've closed below the EMA right here, and so to me, I'm bearish on this pair. Take a look up here. My bias is to the downside. So if you think the same way, you could look at sells below 130.16. I know we're near a major round number, but usually when price comes to a major round numbers, it actually breaks right through and then decides to bounce higher. So in this case, price could still come down to here, and then bounce higher. So again, to the downside below 130.16, and price would have to come all the way up to here and break 132.55 for you to consider a buy trade. Okay, now what's next? Moving right along, the Euro AUD, and take a look at this whopper candle. Okay, huge candle on Friday. You can take a look here. So when you see something like this, a bit of caution, because if you, I am saying you could possibly take a trade right away, because right away Sunday, Monday, we can have a continuation where price just keeps on going right up to the next area, which is here. Okay, so that's why I've got that arrow. So one idea is to take a buy trade right now, but the problem is your stop loss is right here. So that's a big stop loss. Okay, for an aggressive trader, conservative trader, your stop loss would be down here. Okay, so that's pretty big. However, the other idea is wait for price to possibly retrace down and then higher. Okay, now take a look down here. I am biased to the upside. That's why I've got the green arrow here. And if you think that's the case, you could actually wait. So instead of taking a trade right away as soon as the market opens, look at buy above 159.65 to the upside. So I've added a few pips above the close of this candle. If you think price is going to go higher, there's a level for you. And of course, on the downside below 155.76. Okay. Now the next pair coming to an end. Our last pair is the British pound, Japanese yens. We call that GJ Okay, and my bias is to the downside. You can see I've got the red arrow here. This is what happened last week. You can see we have pink below blue, and we're really looking for sell trades, okay? And you see this last candle, okay, right here. So it looks like this is a continuation. This is called a trend continuation boost signal right here. And the only thing that bothers me is these long wicks again right here. So a bit of caution, but that's why if you think price is going to go lower, and I am favoring my biases to the downside, you can look at sells below 147.16 to the upside above 148.56, right? I just want to switch that candle for a second. You see, it was a black candle. We have 3 black candles in a row, okay? Gonna switch them back. 3 candles in a row. To the downside, we have broken just below the 8. So one idea is to take a trade right now to the downside. However, we have green and green here, so we really want to have some caution. My best advice is to wait, and you could wait for price to break below this area right here, 147.16, and if that's the case, price then could likely go down to 146, at least 70 or 80. Okay, so not much of a move to the downside, but you know, again, or just stay away from this pair. But I do favor to the downside. I favor to the downside, but yet the British pound is, you know, is fairly strong. There's good news coming out. The news coming out of Britain is fairly strong, and so that's why, even though I favor to the downside, caution, price certainly could just turn around. You could wait for a turnaround candle or a reversal candle and then look at buys above 148.56. So caution there, okay? And perhaps that's why maybe I should have put a sideways arrow. But, you know, I'm just based on technical analysis here. We had a strong, well, we had a kind of a weak close. This candle actually tells a story. It's a weak close. It's not the strongest of candles, because it was, if the sellers were in total control, the body of this candle would have been closer to the bottom of this wick right here. However, so what happened is that the sellers brought price all the way down, buyers brought it all the way up halfway, and so took away some of the thunder that the sellers were expressing, and that's why I'm a bit cautious on this one. Okay, so that is it for the final pairs. You can watch my videos on the YouTube channel. You can subscribe. I certainly I'm hoping that you click on the subscribe button, okay? And if you want more information on my courses and what I'm offering, I've got a lot of students taking this course, Forex Success in 5 Weeks. If you want the free 33-page ebook, email me. My name is Martin at mskyj007@gmail.com. So there you go. Watch out, this week could be pretty interesting with the interest rate hikes from the U.S. and interest rate news also from Britain as well, and New Zealand. Okay, so pretty interesting week for the news. Could be some good volatility. I expect the U.S. to increase its strength against some of the currencies. Take care, everyone, and we'll talk to you again soon. Bye for now.